Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Australia's property market just keeps on going. Fiscal year 25 is coming to an end with prices rising around the country, helped along by strong demand and interest rate cuts. And in the next 12 months, we're set to see further price growth, driven largely by Sydney and Melbourne, according to Domain's price forecast report. Dr. Nicola Powell is Domain's Chief of Research and Economics. Nicola, welcome back to Fear and Greed.
Thanks, Sean.
Before we talk about the year ahead, the last 12 months or so, how would you sum it up? What are the big trends?
Look, this current financial year has been an interesting one. I think that particularly when we were preempting the cash rate reductions, and I think particularly when we started in the first half of this financial year, that preempting of that rate reduction was really heightened. And when it finally actually came to fruition, in the early part of this year, so in the second half of the financial year, I think we saw it being amplified across our housing markets. And what was interesting towards the latter part of last year, we already started to see demand start to rise. And I think it was mainly coming from investors and those astute buyers that just know what a rate reduction does to a housing market. And then when it was delivered, I think that we've obviously seen 2 rate cuts now. I think what we have seen is buyer confidence is starting to return. And our expectation is that is going to continue over the next financial year.
So what's been the standout city or area for you?
For this current financial year, it is mid-tier cities. So I think the standout performers really in recent times has been Perth, it's been Adelaide, and it's also been Brisbane. These have been standout performers for pretty much, the last 5 years. When you look at the diversity of performance, we have a multi-speed market across our major capital cities. We're expecting that multi-speed market, but some shifts occur in next financial year. And that means that the market is complex. It means that you have to understand those local areas and those local nuances. But when we have a look at the comparison, over the last 5 years, we've seen Adelaide house prices increase 84%. We've seen Perth see a 73% increase, Brisbane a 72% increase in 5 years. And then you go down to Melbourne. Melbourne has been the weakest performer, has only seen a 14% increase. So there's this mass amount of diversity, and Sydney sits at like middle of the road, 46% over that 5-year period. So when you look at the last financial year, growth was led by Adelaide, Perth and Brisbane, and we saw slower conditions in Melbourne and Canberra, and we started to see a bit more growth coming out of the Sydney housing market, and momentum is building in Sydney's.
So just sticking with Perth, Brisbane and Adelaide before we move on to the bigger capitals in Canberra, where's affordability at in those markets now?
We've seen a drastic change in affordability. I think if you are a local to that location, I think you would be really feeling the pinch, particularly if you're a first-home buyer. When you look at the change of affordability over a 5-year period, it's been very extreme in Perth, Adelaide and Brisbane. And I think, I'll loop in with Melbourne as well. We've seen an underperformance of Melbourne. And the thing with Melbourne is it's undervalued at the moment relative to our other capital cities. If you rewind roughly about 5 years ago and you do this comparison of house prices in Melbourne relative to Brisbane, Adelaide and Perth, they were about 35 to 45% cheaper than Melbourne. Today, they're pretty much on par. There's only about a variance of 1 to 3%, which is extraordinary, right? It's extraordinary price change.
I don't understand that. Was that the state government changes that hit investors in Victoria? I still can't quite get my head around why Melbourne has underperformed so much.
Melbourne has significantly underperformed, and it is really unusual because Melbourne actually leads price cycles and tends to even lead in front of Sydney, and then Sydney kind of follows Melbourne's lead. That has not been the case. I think it's a variety of things. I think it is the taxation changes. So it does mean investors have sold off in bulk. First-home buyers have definitely taken that market share, but first-home buyers don't have the deeper pockets as investors. And I think new investment activity has also been very weak across Victoria. But two of the core things for Melbourne is they've had high levels of supply, which I think choice has definitely been there for buyers, which means it's really kept a lid on price growth, and demographic patterns. So we have seen a massive shift in population dynamics in Victoria. When you capture that pandemic period too, there was a massive exodus. And that population dynamic is still recovering. And this is what feeds into, I don't want to reveal our forecasts yet, but this feeds into what our forecasts are for next financial year. By the financial year of 2027, Victoria is expected to be the fastest growing state for population growth. So the recovery is building for Melbourne.
Okay, we'll get to that in a moment. Stay with me, Nicola. We'll be back in a minute. My guest this morning is Nicola Powell from Domain. You left us hanging, Nicola. It's all about what's going to happen, not what has happened. So let's start with Melbourne, which is where we're talking about before the break. Strong population growth. We've actually seen it even in the last kind of few weeks or months in terms of clearance rates and prices. It seems to be, I wouldn't say the boom city, but certainly the leading city at the moment.
We're seeing a marked change in conditions across Melbourne, and you mentioned the clearance rates. They have been really consistent, and they're consistently in those high 60s. So that is a massive improvement compared to 12 months ago. Momentum is building. I think we're particularly seeing that in the premium end of Melbourne's housing market. And what our forecasts are for next financial year is a 6% increase for house prices, which means Melbourne is going to take the lead along with Sydney. We are going to see the strongest rates of price growth coming out of Sydney and Melbourne. This is a massive change for Melbourne. We have to remember that pretty much over the current financial year, nothing happened with price. It was pretty much a 0% change. We're going to see it move into a recovery. And most importantly, what our expectations are, house prices in Melbourne are going to be at a new record high by the end of the financial year. So we are making a big call here. We are expecting Melbourne to move into an established recovery and fully recover in terms of price.
So what's the growth rate in Melbourne going to be over the next 12 months or so?
We're expecting a 6% increase in house prices. Now, that's not boom time. I think that's modest rates of price growth, but it means that the median price is going to be at a new record high, and we're estimating it to be, or forecasting it to be, at $1.11 million. And that's a new record for Melbourne.
Okay, Sydney. What's going to happen in the Emerald City?
Sydney, we're expecting to lead price growth out of all of the capital cities, 7% increase for house prices and a 6% increase for unit prices. Now, our call is that Sydney and Melbourne are going to lead price growth. And one of the core foundations of that is what we're going to see over the next financial year is the baton is passing. And that baton is passing from affordability-driven markets, such as Adelaide, Brisbane, to interest rate sensitive markets. And that is Sydney and Melbourne. What you tend to find is that Sydney and Melbourne are much more sensitive to changes in economic conditions and therefore changes in the cash rate. And our expectations is the reduction in the cash rate is going to be amplified through Sydney and Melbourne's housing markets much quicker relative to other cities.
What about Canberra? We don't talk a lot about it. It hasn't had a great year. What about the next year?
Canberra hasn't had a great year. It hasn't had a great few years. It really did lead price growth during that peak in the pandemic and has really struggled to move into an established recovery. But this is one of our other call-outs for next financial year. We are expecting Canberra to move into a pricing recovery. We're expecting forecasting a 4% increase for house prices in Canberra and a 3% increase for unit prices. It's not going to quite be fully recovered, but it's going to be well on its way to recovery. And house prices are going to be sitting about 7% lower than their peak that was hit during the pandemic, but will be on the road to recovery.
Okay, so we can't really leave without talking about Perth, Brisbane, Adelaide. They have done so well. Am I reading between the lines suggesting that they won't be doing as well this year?
They're not going to be doing as well as what they've previously seen. I mean, when you look at Adelaide, it's been the unstoppable housing market. It's seen double-digit growth for many years, much more subdued conditions in terms of price growth coming out of these capital cities. Look, demand is there's still a bit of momentum, particularly in Brisbane. But I think Adelaide and Perth really are the capital cities where we're going to see a marked slowdown relative to what we'd seen over the current financial year. So we're forecasting a 5% increase for house prices in Perth and a 6% increase for units. This is the only capital city where we're making that call that units in Perth are going to outperform outperform house prices. And I think that that's the investor story and it's the affordability story. And then when you go to Brisbane, 5% increase both for house and unit prices, and Adelaide, one of the slower capital cities, 4% increase for house prices and a 3% nudge up for unit prices.
Even though it's slower, we're not going to get economic growth at 4%. So it's still a real return.
Yeah.
In a sense.
And I agree. I think, I think when we look at these housing markets, they've had such continuous momentum over many years. And I think really it is affordability catching up with that momentum is probably the best way that I would describe it. There is only so far budgets can stretch. And when you've got a wide gap between where home prices sits and the actual capacity of a buyer to pay for that home, I think that in itself is going to slow price growth. But it's even keeping price growth more modest in other capital cities like Sydney and Melbourne, because we still have got affordability issues. I mean, we've seen rates come down, and we're expecting another 2 or 3 rate cuts this calendar year. But there's still lots of uncertainties. There's lots of turmoil happening across the world, which can impact us domestically here in terms of inflation.
Nicola, thank you for talking to Fear and Greed.
Thank you.
That was Dr. Nicola Powell, Domain's Chief of Research and Economics. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, business news you can use. I'm Sean Aylmer. Enjoy your day.